Hi, it's November 2021. Tiger Brokers special situation back now. How to value the Southeast Asia business? Does it save the day? But risk only if you can take the risk. Appreciate a like if you like this video and do subscribe to my YouTube channel. Recent developments at Tiger Brokers. I touched on this recently, so I wouldn't go too much into detail. What I will do here is, you see, 1st November 2021 is the implementation of Personal Information Protection Law effective date. So far, I haven't heard anything, but Tiger has already informed the Chinese users to sign PIPL related forms. Question is it good enough? I'm still waiting for news from Chinese media. The biggest concern now is actually a statement from PBOC soon. But think through, what could happen? I touched on the scenario analysis before, so here's the list of scenarios that I did. You can take a look at my past videos if you want more details. This is the expansion of worst case scenarios that I did, but what I want to emphasize here is that to me, this is really a business of brand equity and customer deposit. Note that ByteDance, Shopee all have offices in Singapore. Even if they close down the China operations, here in Singapore, they can hire the technical expertise to do what they are doing back in China. This is just a recap of the corporate structure that I did recently. Take a look. And this is what happened in the event CSRC does not issue China license, Chinese operation dissolve. Everything is still intact for the Southeast Asia business. Is investing overseas shares by Chinese citizens allowed? This is a grey area, and in fact the number one most important point to consider right now. China's securities regulator warned against use of unauthorized apps as early back in 2016, and China moves allowing investment in overseas stock in 2021, February. Think through. But I will also do a recap of more historical research into what happened for the regulatory news. What if we did more into history? QDII-2 pilot plan in the works. This is back in 2013, where China was intending to have a trial program that allows the citizens to take position in overseas capital markets in a bid to boost outbound investment. That's said by PBOC way back in 2013. You see? So there's also another report by Shanghai Free Trade Zone to say that they are intending to allow Chinese investors to invest overseas, and this is back in 2014. Even in 2015, PBOC Yigan actually mentioned that China studies relaxing limits on individuals investing overseas. The question to note here is, Yigan is now the PBOC chief, but what does Su Zhenyi's recent words imply? Are there any change in thought process over the last 6 years? The current schemes that allow investors to invest overseas include QDII and Shanghai Hong Kong Southbound Equity Plan. So what's QDII? It's a Qualified Domestic Institutional Investors, which started way back in 2006. So you see, all these are the various names that fall under the Qualified Domestic Institutional Investors. And you will see that there are many banks, securities firms, insurance firms, and trusts. So what does Qualified Domestic Institutional Investor mean? They mean, by Wikipedia, it's a scheme that relates to capital market setup to allow financial institutions to invest in offshore markets such as securities and bonds. And what's Shanghai Hong Kong Stock Connect? Well, Shanghai Hong Kong Stock Connect is a cross-boundary investment channel that allows the connections of Shanghai Stock Exchange and Hong Kong Stock Exchange. Under this program, investors in each market are able to trade shares on the other market using their local brokers and clearing houses. But retail investors have requirements. They need to have an account balance of more than 500k RMB. You see, this is what has been prepared by Goldman Sachs before, way back when it was first launched. So what about Beijing Stock Exchange Initiative? In a video addressed by Mr. C, he actually mentioned about deepening the reform of the new third board and setting up the Beijing Stock Exchange as the primary platform serving innovation-oriented small medium enterprises. There's also a requirement for individual investors, where individual investors have to be eligible, which means that they need to have at least 2 years of experience in security investment, and their daily security assets should be no less than 500,000 RMB. Because of this, is there any change in investment mindset by PBOC that they are no longer looking at overseas investments by the local citizens? that is really a number one question we really have to think through. Right now, the notes is there's a lot of uncertainty over investment overseas. If push ahead, I believe PBOC, CSRC, and SAFE want to regulate overseas investment so that they can track the renminbi flow overseas. This is just a recap of Robinhood, IFAS, etc. valuation. This is what I have covered in the past. I updated the numbers. With that in mind, you think through what Southeast Asia customer deposit by Tigers by year end 2021 and going into 2022, 2023 and think through the numbers. I have provided some numbers, but you yourself have to think through as well to see what is kind of valuation tag that you want to attach to, as well as what's the customer deposit for Southeast Asia business as a fallback plan in terms of Tiger Brokers base value. To me, buying at current price is already buying the Southeast Asia business at a fair value or even a bit discount and get a free option on a sudden positive regulatory swing if it really happens. If it doesn't happen, my base case to support my value for Tiger Brokers is the Southeast Asia business. Is Tiger Brokers 10 baggers or more? Or is it just a situational bet right now where we have a free call option or someone may value it at 2.5 USD per call? Why 2.5? Assuming the customer deposit is a certain dollar value and you attach a 4 USD value to Tiger Southeast Asia business, which means that at 6.5 USD share price, 6.5 minus $4, the call going into future to back on the regulatory outcome is 2.5. It can potentially be very valuable, or it can be aspiring worthless is the regulatory swing in the negative direction. If the regulatory swing in a very positive direction, this call of 2.5, assuming you value Tiger Brokers Southeast Asia business at $4, will become immensely valuable. And these are the return metrics that are updated based on current price of 6.5 USD based on last Friday's share price closing value around there. You can take a look in terms of the numbers and potential loss and potential gain in terms of percentage. So what's your view? Think through, have a view. As always, this should not be construed as any investment or trading advice. Do stay tuned and subscribe to my YouTube channel so that I can be kept updated promptly when I release new videos to reflect the changing market conditions